Hi everyone, and welcome to the PPP Loan Frequently Asked Questions Part 1. And the reason why it's Part 1 is because there's probably going to have to be a Part 2 and a Part 3 and even possibly a Part 4. And the reason for this is because of clarifications that are constantly coming out around the PPP loan as well as the PPP loan forgiveness. Now, the reason why clarification is needed is because, as you know, Congress writes the law. And it's not always clear when they write the law of what their intent was. So therefore, banks and even CPAs and enrolled agents and other accountants normally interpret the law based upon what they think Congress meant. And that's the reason why clarification is sometimes needed. So the information that I'm providing today is based upon what we believe Congress intended when they wrote the portion of forgiveness for PPP loan. So if there are any clarifications or any adjustments that I need to make based upon what I'm telling you or what I'm sharing with you today, I'm going to come back and make those clarifications and those adjustments. So the first thing you need to know is that, of course, the PPP loan is a forgivable loan. Now, because the process of providing these loans and also the forgiveness portion of it are in the hands of the banks, it's very important that you contact the bank that gave you the loan to find out what type of paperwork they're going to need when it's time for forgiveness. Because you don't want to wait until the last minute to start to gather everything that is needed for you to show in order for you to get forgiveness. It's something you want to start right away. So the minute you start spending that money, you want to make sure that you are tracking things in a way that your bank would need to see for forgiveness purposes. Hi there. So I just finished making a recording for the PPP loan forgiveness for hair salons that have employees. And it just dawned on me that I needed to make a separate one for Schedule C filers, mainly because the way the forgiveness runs for Schedule C filers is a lot different from the way it is for businesses that have employees. So there's a different calculation there. So for this video, I'm really speaking to booth renters, I'm speaking to salon suite owners, I'm also speaking to independent stylists or independent contractors if you file a Schedule C, which means that you are either a sole proprietor or you are a single member LLC. This video is for you as it relates to loan forgiveness. So the first portion of this video, I'm going to talk about how the loan is calculated and what portion of your loan is forgiven. And for the second half of the video, if you happen not to own a hair salon, then you can just skip that part. However, if you are a Schedule C filer, but you also own your hair salon, then you might want to continue listening on, even if you don't have employees. Okay, so when it comes to forgiveness for the PPP loan, as it relates to Schedule C filers, the mathematics is straightforward. Unlike for salons that have employees, there is a 75-25 split that they play around with. Whereas when it comes to Schedule C filers, the forgivable portion is strictly 8 weeks pay. And how that is calculated is the bank takes your the total amount of income that you made in 2019, and they basically divide that by 52 because we have 52 weeks in the year. So you divide that by 52 and then you multiply that by 8, and that pretty much gives you how much of your loan is going to be forgiven. Now, where it gets really tricky is the fact that you are actually being loaned a total of about 10 weeks pay. So you're being loaned what your total income is divided by 12, okay? And that gives you your average payroll. So your average net income. And then they take that average net income and multiply it by 2.5, which then gives you the amount of your total loan. So the question now becomes, because you are only forgiven the 8 weeks portion, then what happens to the additional amount of the loan? So let me use numbers. So let's say, for example, you make $100,000. So let's say you make $100,000 a year. That means that your loan is going to be to $20,833. Okay. However, the amount of that is automatically going to be forgiven is 8 weeks pay, which comes to $15,384.61. So we know that's what's forgivable. So the two things we know is how much you were loaned, which was $20,833, and we know how much is going to be forgiven, which is the $15,384, which leaves an additional amount of $5,448.30. So now the question becomes, what happens with that dollar amount? What happens with the $5,000? Is it going to be forgiven? Is it not going to be forgiven? Well, basically, if you're a salon owner, you can use that additional amount to pay all of the other costs, which are rent, a mortgage interest, and also utilities. So if you are a salon suite owner, then you can, as you continue watching this video, you'll see how that particular part of the forgiveness works. Now, if you are not a salon owner, let's say you're a booth renter, then that means that the only other expense you have outside of paying yourself your compensation is your booth rent. So depending upon how much your booth rent is, if your booth rent is $1,000 a month, that means you're paying your landlord $2,000 in the 8-week period, which means you're still left with about $3,448. Well, what do you do with that? Well, as of today, that portion is not forgivable. As of today. Now that could change because this is changing. These rules are changing all the time. But as of today, that overage is not forgivable. So your only other choice would be to give the money back, unless you have something else suspended on that falls within the realm of forgiveness. Now, if you are a salon suite owner, on the other hand, it's a little bit different because in that case, you probably have your rent and you may or may not have utilities. It just depends on how your salon suite is set up. So if your rent includes all of the utilities, that then means that you don't have any utilities to pay. Now, of course, as a booth renter and as a salon suite owner, or as a salon suite owner, you more than likely you have internet. But the question is, are you paying your internet? Or is that part of your rent? So basically, what I'm trying to say is, for those of you who are Schedule C filers, you're a booth renter, salon suite owner, or you own a hair salon and you have no employees and you file a Schedule C, you really want to take into consideration as you spend this loan money, and if you want forgiveness for the entire 100%, you really want to take in consideration how you're spending the money and if you need to give a portion of this money back. Now, keep in mind that if you do decide to keep the overage, that you're only really being charged 1% on the loan. So if you keep the loan and you spend it on something else, then you do have to pay it back, but only at a 1% rate. But if you don't want to even be responsible or obligated to pay anything back, then you might want to contact your CPA, contact your accountant, so they can help you navigate the waters of what is forgivable and what is not forgivable, okay? Another expense that you can pay in order to get loan forgiveness is rent. So that one is pretty simple. Rent is what it is, it's rent. If you are a booth renter, then the rent that you pay to your landlord is also considered rent for you, and therefore it can also be forgiveness. So basically, rent that you pay on your building, if you are renting a salon, rent that you pay on your salon suite, if you are a salon suite renter, and then rent that a booth renter pays to their landlord if you are a booth renter. All of those are forgivable expenses. And then there are utilities. So for loan forgiveness purposes, utilities are considered electric, gas, water, telephone, and internet. And then there is something on the end of that that says ETC. So ETC means etc., 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 which means that there's possibly additional items that they may add to utilities. So for right now, we have these 5 items, or rather these 5 utilities that I mentioned, but that may expand over time. So of course, when I come back to do a part 2 or a part 3 of frequently asked questions, then I will let you know if anything has been added to the utilities for loan forgiveness purposes. And then there's the final one, mortgage interest. Now, one of the questions that I get around this particular forgivable item is, what is considered a mortgage? So a mortgage under these circumstances, as related to the PPP loan forgiveness, is anything that any asset, any business asset that you own that is being secured by a loan. For example, let's say you own the building that your salon is located in. Well, that means that you will be paying the mortgage for the building, and the interest portion of that is what is forgivable. For example, if your total note is $1,000 and 200 of that is considered interest, that means that the $200 out of the 1,000 is forgivable. So the principal portion, which would be, or rather the principal and the taxes and insurance, which will accumulate to $800, is not forgivable. Only the interest portion of the entire payment is forgivable. Also, mortgage can also be considered any item, as I said, any item that you have a loan on that is secured by a business asset. So if you have a salon full of furniture, okay, and you have a loan on all of that furniture, and that loan is being secured by the assets, meaning that if you don't pay the loan, that means that the finance company or whoever owns those assets can come take them from you. That's what's considered under these circumstances as a mortgage. So that means the interest that you are paying on your furniture is also forgiven. So if you're paying $500 a month on your salon equipment, and out of that $500, $100 of that is considered interest, well, that is forgivable under the PPP loan. So that is what is considered mortgage interest. Any business asset that is being secured by a loan. Forgivable mortgage interest does not include interest that you are paying on, say, a line of credit. Or if you just have a regular loan out for the business and you're paying interest on that loan, it is not necessarily forgivable, because the loan that you have out for your business may not be secured by a business asset. So under those circumstances, the interest that you're paying for those types of loan are not part of what is forgiven under the PPP loan forgiveness program. Now, I want you to keep in mind that all of these expenses that are considered forgivable have to have been expenses that you were paying prior to February 15th, 2020. So in other words, more than likely, all of these expenses already exist on your 2019 tax return as an expense. That is one of the criteria. They have to have existed as an expense in a prior on a prior tax return. But more important, they have to have existed before February 15th, 2020. You can't have created an expense after the fact. So for example, let's say in your salon, there was no landline, but then you decided on March 20th to put a landline in your salon. That would mean that that particular expense, so your phone bill, will not be part of what is forgiven as part of the PPP loan forgiveness program. So keep in mind, the expense has to have been in existence prior to COVID-19. Otherwise, it is not one of the expenses that will be forgiven during the PPP loan forgiveness process. And I'll be back as updates occur for the PPP loan forgiveness.